Hello and welcome to the day ahead. It is Thursday, November the 27th. I'm Andrew Gagan. Well, the local market is set to extend its recent gains with ASX futures up around 1/3%. Equity markets have strengthened with the MSCI's gauge of global stocks having gained around 3.5% in a 4-day rally. While on Wall Street, expectations continue to build for a December interest rate cut from the Fed, buoying sentiment. And a Reuters poll of analysts has revealed an average forecast for the S&P 500 rising by 12% over the next 12 months, powered by a robust economy, continued tech sector strength and an accommodative Fed. In the session just gone, tech stocks were back in favour, with investors looking past concerns over inflated valuations. Among the Mag 7 stocks, Apple and Microsoft were in the green. Dell shares jumped in the wake of its better than expected earnings and upbeat forecast. However, shares of PC maker HP fell on 2026 adjusted EPS forecast that missed analyst estimates, while it's also announced it will cut up to 6,000 jobs globally by 2028 as it looks to streamline operations. Human resources software firm Workday slid after the company reported third quarter revenue below estimates. Heavy machinery maker Deere's weaker than expected annual profit forecast, which was weighed down by the tariff effects, sent its shares lower. Apparel retailer Urban Outfitters rose as its third quarter net sales beat estimates. And the airlines were sharply higher on what is traditionally the busiest travel day of the year for commercial carriers in the US ahead of Thanksgiving Day. In the UK, the blue chip FTSE 100 closed almost 1% higher, boosted by gains in financials and mining stocks as the government announced a big tax-raising budget. Well, US weekly initial jobless claims have fallen below consensus, although ongoing claims remain on an upward trend, supporting recent survey data showing consumers' assessment of the labour market is deteriorating. And core capital goods orders in September topped estimates, suggesting corporate expenditures are more robust than economists predicted. The Federal Reserve's Beige Book has found that among regional districts, overall consumer spending declined further while higher-end retail spending remained resilient. Some retailers noting a negative impact on consumer purchases from the government shutdown. Manufacturing activity increased somewhat, although tariffs and tariff uncertainty remained a headwind, it says. US Treasury yields were mixed as stronger than expected economic data fueled selling, but a sharp rally in UK government bonds helped limit the downside for longer dated US debt. The US 2-year Treasury yield rising to 3.5%, the 10-year was around 4%. The US dollar index was down slightly while the Aussie dollar has rallied above 65 cents to 65.2 US following the stronger than expected monthly inflation data. Oil prices bounced back from 1-month lows as investors consider the prospect of oversupply and talks over a Russia-Ukraine peace deal ahead of the US Thanksgiving holiday. Brent crude futures up 1% to $63 a barrel. Copper has surged 2%, iron ore up 0.8% to 107 US a tonne, and gold is near a 1-week high on expectations of a Fed rate cut. Spot gold at around $4,160 an ounce. And Bitcoin is up more than 3% to close to 90,000 US dollars. Locally today, we get third quarter private capex figures, and on the corporate calendar, QBE is due to report results, while Hub24 is hosting a strategy day, and Downer EDI is hosting an investor day. That is your day ahead. See you again tomorrow.